In 1933, the United States government made a decision that shocked its citizens. It outlawed private ownership of gold. Why? Because the financial system was under pressure and policymakers needed control. Fast forward to today, Ray Dalio, one of the most respected macro investors of our time, is warning that we are approaching a similar kind of inflection point, not identical in form, but comparable in consequence. A moment where the rules change, a moment where traditional savings, cash, bonds, even retirement portfolios face a silent but powerful threat. And according to Dalio's research, 2026 could mark the peak of a major transition in what he calls the Big Cycle. The question is not whether change is coming. The real question is, will your wealth survive it? To understand Dalio's warning, we need to step back and look at the system, not just the headlines. Dalio's framework, often referred to as the Big Cycle, studies the rise and decline of empires and their economic systems over long periods of time. This cycle includes the buildup of debt, the expansion of money supply, increasing inequality, political conflict, and eventually a restructuring of the financial order. This isn't theory alone. It's based on centuries of data, from the Dutch Empire to the British Empire to the United States today. And according to Dalio, the US is now in the late stage of this cycle, a stage historically defined by high debt levels, internal conflict, and external competition, which brings us to the first major risk. The United States is currently carrying over $34 trillion in national debt. But the number alone isn't the real issue. The real issue is how that debt is being managed. Think of the economy like a household. If your expenses exceed your income, you borrow. At first, it's manageable, but over time, the interest on that debt begins to compound. Eventually, you reach a point where you can't repay the principal and you struggle to even cover the interest. At that point, there are only a few options: austerity, cut spending, politically difficult default, not pay the debt, economically catastrophic, print money, increase the money supply. Historically, governments choose the third option, and this is where the danger to savings begins. When central banks print money to service debt, they effectively devalue the currency. This doesn't happen overnight. It happens gradually, through inflation. Your dollars don't disappear. They simply lose purchasing power. Dalio describes this as a hidden tax. For example, if inflation averages 5% annually, your purchasing power halves in roughly 14 years. So even if your savings account balance remains the same, your real wealth is declining. Now consider this: the Federal Reserve has already expanded its balance sheet dramatically over the past decade, and with debt levels rising, the pressure to continue this trend is increasing. This is what Dalio calls the endgame of the long-term debt cycle, a period where money printing accelerates, real interest rates remain low or negative, and traditional savers are penalized. In other words, holding cash alone becomes a losing strategy. But debt is only one part of the equation. The second major force in Dalio's framework is internal conflict and external competition. Let's start domestically. The United States is experiencing one of the widest wealth gaps in modern history. The top percentage of the population controls a disproportionately large share of assets, while a significant portion of the population struggles with rising costs. Historically, this kind of imbalance leads to political polarization, policy instability, and social tension. Dalio's research shows that when wealth gaps reach extreme levels, societies tend to move toward redistributive policies. This can take many forms: higher taxes on capital, increased regulation, changes in fiscal policy. For investors, this creates uncertainty because the rules governing wealth can shift. Now let's zoom out globally. The US has long held the position of the world's dominant economic power, but that dominance is no longer uncontested. Countries like China have grown rapidly, in economic output, technological capability, and geopolitical influence. This shift represents what Dalio calls a changing world order. Historically, when a rising power challenges an established one, tensions increase, not necessarily through direct conflict, but through trade wars, currency competition, and strategic alliances. One critical element here is the reserve currency status of the US dollar. For decades, global trade has been conducted primarily in dollars. This has given the US a unique advantage. It can borrow more cheaply and print money with fewer immediate consequences. But if confidence in the dollar declines, even slightly, demand for US debt could weaken, and that would amplify the risks we discussed earlier. Dalio doesn't predict exact outcomes, but he identifies patterns, and the pattern we're seeing today closely resembles late-cycle dynamics observed in previous global transitions. So, what does Dalio recommend? Not panic, not speculation, but strategic preparation. At the core of his philosophy is a concept he calls the Holy Grail of investing, and it's based on a simple principle: diversification across uncorrelated assets. Most investors believe they are diversified, but in reality, many portfolios are heavily concentrated in stocks, bonds, and assets tied to the same economic conditions. Dalio's research shows that true diversification comes from combining assets that respond differently to inflation, growth, and economic shocks. Let's break down key components of this strategy. These are government bonds designed to adjust with inflation. They provide protection against the erosion of purchasing power. In an environment where inflation risk is elevated, they serve as a stabilizing force. Gold has been used as a store of value for thousands of years. Why? Because it is limited in supply, globally recognized, and not tied to any single government. Dalio has consistently advocated for having a portion of your portfolio in gold, not as a speculative bet, but as insurance. Silver and other precious metals can serve similar roles, though with higher volatility. Cash is often criticized in inflationary environments, but Dalio doesn't dismiss it entirely. Instead, he emphasizes strategic liquidity. Having access to cash allows you to navigate volatility, take advantage of opportunities, and avoid forced selling. The key is not to over-allocate. This is perhaps the most important category: assets that generate real economic value. Examples include businesses with strong cash flow, infrastructure, certain real estate investments. These assets have the ability to adjust prices, maintain margins, and grow over time. In other words, they are tied to productivity, not just financial engineering. Dalio also emphasizes the importance of not being overly concentrated in a single country. As the world order shifts, opportunities and risks will vary across regions. A globally diversified portfolio can help balance these dynamics. Dalio's strategy is not about predicting the future with precision. It's about building a portfolio that can withstand multiple scenarios: inflation, deflation, growth, recession. Because the reality is, no one knows exactly how 2026 will unfold, but the risks are visible and preparation is possible. Ray Dalio's warning is not a prediction of collapse. It is a call for awareness, a recognition that we are living through a period of structural change, where debt levels are high, monetary policy is stretched, and the global balance of power is shifting. For the average investor, the greatest risk is not volatility, it is complacency, assuming that the strategies of the past will continue to work in the future. But history suggests otherwise. Every major cycle brings both disruption and opportunity. Those who understand the system and adapt tend to preserve and grow their wealth. Those who don't often see their purchasing power quietly erode. So the question is simple: are you positioned for the world that's coming or the one that's already gone? If you found this analysis valuable, subscribe to Macro Wealth Lab, because in the coming months we'll continue breaking down macroeconomic trends, wealth protection strategies, and the evolving global financial system, not with noise, but with clarity, data, and perspective. Your financial future depends on the decisions you make today. Make them informed.